Okay, I want to do this quick video on a trade that I'm doing this week coming up. Okay, this is PayPal, and this is a weekly chart, 3-year weekly, but obviously PayPal hasn't been around that long. They've just recently been this last year from the split off of eBay. So I'm going to give you the chart, and I'm going to give you the reasoning, and I'm going to go over the options. So this will be pretty informative for you guys to see. Okay, first of all, we can kind of see there's not a lot of history to this because, like I said, they are still new. Okay, so we're not going to have anything for the RSI in the weekly. The MACD histogram is still in play here, and there's a few weekly candles in here to at least make a little bit of a decision. So here's what I'm looking at. Okay, the moving averages obviously are going to be flat on a weekly because it hasn't been around long. But we do see a breakdown here. Before earlier, middle of the year or so, they had, it looks like the same thing. They had some support, got back up here, and then made this support again, and then ran up to this area here, which is around 38 bucks. And obviously, they just have not been holding. And I know we had some recent trouble in the markets the last couple weeks. I understand that. But here's the theory on it. One, you can see that it's in this channel for right now, and this channel is declining. The MACD histogram is declining. Okay, if there was an RSI, I guarantee that's down low and it would be declining. They have had their support right around 30 and a half. Okay, what I'm seeing here is that this area is very, very important for a number of reasons. One, the stock doesn't have any history. Generally, people don't like that, and they don't like to trade that. And here's why. Because if there's no history, they can't look left to find out where's the area of support is, where could the next bounce be. There's no algorithms to go off of. There's nothing but complete no man's land or free fall. This is a perfect short opportunity, in my opinion, because of those reasons. So what I'm looking at now is I'm looking at, and I can see right here, I've got my marker set up for my alert, $30.49. That's the target area that I'm looking to break. But I'm actually going to not wait for that to break. Now, if earnings weren't this soon, if earnings were, much later, then yeah, I could wait a little bit. But earnings are coming up on Wednesday of this week. So I want to be in this play before. You can look at a lot of the other sectors. You can look at, American Express is a great one. They had some business problems with Costco, with some other things, declining business, and they really took a nice hit the other day. And I did real well on some put options that I had into earnings for that. That was a perfect setup. But let's not get into that. Let's stay back on PayPal here. So I believe they're going to have the same thing. And what I want to do is I want to buy half of my position for the puts on this one. First of all, let's look at the puts on here. Let's go down. I want a little bit of time, but I want a good value. So these Aprils at 82 days, that's quite a bit of time. And if you look, the 30 strike price here is really a good, nice, cheap price. It's not bad. It's 145 by 160, and look at the huge amount of volume stacked up here, 8,715, compared to some calls over here that are real light in volume, a lot of open interest, but light in volume. So we're looking at that, and right now the price of the stock is $31.69. So this gets below 30 relatively quick, and these pick up some serious value. The next ones are the 25s. That's too far out of the money, no good. You got to stick in here, and you can see this is where the smart money is right here. So we're going to go back into looking at the 30s for $1.45 or so. I'd like to get them a little cheaper, and I'll explain here in a minute. So anyways, if this were to break this, which I believe it will soon, you get into this no man's land area, and it comes down into this trend channel. That's the only thing that maybe can develop. This next spot on the trend channel could be down into maybe a $25 area, somewhere in there. I think those options they get really attractive then. I mean, I think that this thing, if it cracks 30, I think it gets to 25 fast. You know, that's 4 times your money. I want to look at least an opportunity for 3 times my money when I'm doing options. That puts me at like 4 to 5 times my money. So even if you just do 10 contracts for, you know, $1,400 and you can make $5,000 on it, that's a great return. Great risk reward. And, you know, if you're playing light and you're not used to the options, what you can do is just go light on it. Go, you know, whatever makes you feel comfortable. You do 5 contracts, you know, and then if we have a bounce on earnings, and I am prepared for that, so I want to do both scenarios here. If this were to have some type of decent, for some reason, some jump on earnings, I'm going to just wait for the next day. 1 or 2 days is usually the rule, and I'm going to add to that short position on my puts. So let's say if I do, my rule, I usually, and for me, and you guys do whatever is comfortable for you, but for me, I'm usually doing at least 20, 25 contracts, okay? So if you, let's say I were to buy 10 contracts now, or 20 to 25, whatever makes you guys feel comfortable, and this were to bounce up to this trend channel or even up into here, I would just add to those because they have so much time on them, and because they are just, like I said, I gave you the reasons, the business, it's deteriorating. And PayPal, you know, everybody's used them. I'm sure you guys have used them. Everybody's used them from time to time. I've used them for over the last decade. And I got to tell you, their customer service is stinks. Everything about them is just, it's not really good. The only reason they survived this long is because, you know, when eBay first came on to the market many, many, many years ago, there really wasn't anything to go to. PayPal was the only premier service that was attached to eBay. Well, now we've got all these new businesses, and we've got so many more in the field. MasterCard, Visa, American Express, everybody's going to be getting into that, and those companies have been doing it a lot longer and a lot better than PayPal, and they're eventually going to squeeze the business out of them. So it's got the right setup. It's got everything going for this trade. Now let's go in from a weekly to a daily, and we'll see if we can get some more information. Okay. Okay, beautiful. So this is a daily chart, so this will give us a little bit more information. Now you can see we have an RSI here that's really low. It's below 40, which is great. And the histogram is negative. That's great. And you can see that this is lower lows and lower highs. Perfect setup. What I'm hoping this does is I'm hoping this runs up a little bit, maybe Monday or Tuesday, so I can get in to a really good short position on it. But either way, if this starts going down into earnings, I'm just going to buy it, you know. But my perfect scenario would be is if it ran up a little bit to maybe around 33 bucks, or if I could get really lucky to 34 and get into a short position, that would be perfect. But either way, I'm going to be in this and just kind of waiting to see what happens with earnings and then the breakdown, or I'll add and then let the time go. And either way, I believe that this trade is a profitable trade. So there's no reason to look at anything more than the daily. I'm not going to nitpick this one like I do some other ones. I mean, obviously, when I go to trade it, I'm probably going to be in a 5-minute or a 15-minute, just so I can get the best fill price if I can. So on a 15-minute, it looks the same thing. I mean, I'm hoping for $33 if I can get it. I don't know that I will, but either way, and you can see this 30.52 pop up right here, so I'm really close to what I'm looking for here. So I think this is a trade that you guys really need to look at, and like I said, it's an easy one to do, and if you're not familiar with the options, this is a good place to start. And the options are really cheap, so even if you just want to try the trade and learn a little bit, the spread isn't too bad. 145 by 60 could be a little better, but I've seen a lot worse, so it's not horrible. You're following where the money's at, and you know, if you do You could do 3 contracts, 5 contracts. You could do something a little bit small if you've never done the options before. It's a good trade to start off with, and you're not losing more than you're putting up. So keep your risk and your money management in there, because if this thing does go the other way, be prepared to add some. So that's the mindset that you have to go into. Always look at the negative first. If it goes away from you, what are you going to do? I already know what I'm going to do. I'm going to add some to the short position, and then go from there, and then see how it develops. But always use your money management. Make sure that you don't get into a max pain. And let's talk about a max pain right now. Since this has been lower highs and lower lows, well, almost, definitely lower highs, I would say the max pain would have to get, above, and I know it's a long way, so this is max pain of around 37. That would be a huge run for this. And right now with these market conditions and the way that this model is set up, I don't believe, in my opinion, that this is going to get above 37. You can use your own max pain depending on the percentage or the cash that you're going to stick into the trade here. You can look at maybe a 34 or even a 35. So just keep that in mind. Keep in mind what happens if the trade goes against you. But I think this is a good setup, good risk. For the reward, it's going to be at least 4 times the reward. And one last thing I want to talk about here, go back to the weekly one more time just to give you my thoughts on this. If this thing, as I talked about at the start of the video, if this thing here breaks below here, there's really no man's land for this. And because of that, people don't want to take risk, especially with the way the markets are performing now, and people don't want to assume any risk. So if this gets through here, this is really going to start, making a nice move to the downside. I think that this goes to at least, if I would just have to make a quick guesstimate, because there's no history as I explained, this is going to go to, to 25 to 20 to mid or high teens. This is a really good option setup. If you have the time, which we do, we have 82 days on this. This could be, who knows, this could be a stellar trade. I mean, if you get, just assuming that we got down into 20, anything can happen. I'm not trying to juice this trade too much, but I'm just putting it out there. Between 24 and 20, I mean, if this thing fell to 20 in those 82 days, well, the intrinsic value just alone would be $10 on these. And 10 contracts, it's 10 grand. It's, it's a nice trade. 10 grand profit. And even halfway puts you at 5 grand. 30 to 35, they still be worth about $5. So plus if there's any time value left, so it's at least five times the amount. Could be up to 10 times the amount. So I think it's worth putting on this trade. For me, this is the only trade that I'm going to be working on this week. One at a time. You don't want to overtrade. A lot of people do that. They put on too many trades. It's hard to manage. If it starts going your way, then of course you can set your stops. You can do all the other stuff. And then you can go on and do some trading, the other thing. But I think a lot of people just get too crazy and put on too many trades, and it's hard to monitor too many things all at once. I think it's quality over quantity. That's just the way that I've been doing it for the last decade or so. So take these things into consideration. And if you guys got any questions, just hit me up on the post, and wish you well.